The markets continue to be hot as New York City finally enters into phase one of reopening, but the nation's social conscience continues to weigh on investors' minds. Joining us to digest some of this is Katie Koch, co-head of fundamental equity at Goldman Sachs. Katie, good to see you again here. In your view, someone who looks at the fundamentals of companies, the stock market is melting up right now. What is the market saying about the future direction of fundamentals for companies?
Yeah, so it's very interesting how resilient markets, in fact, have been. They were up another 5% last week on the back of that social unrest and some other challenging data points from parts of the economy. And in fact, actually, we capped off the best 50-day rally we've ever had in the history of U.S. equity markets. So I do want to touch on the social unrest really quickly for a second, because I think in the near term, markets have been able to look through that. But in the long term, as a business community and as a nation, if we don't do something to address the cumulative effects of 400 plus years of systemic racism in this country, we are going to be facing some pretty significant challenges to the economy and to the markets. And just briefly on that, I think rightfully leaders are being asked what they're doing specifically to address that. And I just want to say quickly, I co-head, as you know, our fundamental equities business at GSAM. And as part of that, I oversee our stewardship and engagement effort for $300 billion of direct equity. So what we and our team are focused on as it relates to racial equity is actually pushing for better disclosure of leadership and broad employment diversification stats. And I'll just end by saying that, we are very big believers that diverse teams perform better. Half of our assets are run by women. We need to make more progress on the racial equity front. But we are one of the first major asset managers to vote against the nominating committees of any public company without a woman on the board. And we would like to do the same thing for racial diversity, but we lack the data. And as any good investor or management team knows, if you can't measure it, you can't push for the improvement that you want to see. And so what we're really committed to doing through over the next several years is pushing for companies to report more broadly on workplace demographics, so we can align our engagement and proxy policies to push for better racial equity. And this obviously isn't the panacea answer to the situation that we're facing, but we think it's quite foundational in terms of what we're gender equity to do to push for greater racial equity.
Katie, clearly more work needs to be done in that area, but there has been some progress made in some areas more than others. Through the lens that you're looking at there, your perch there at Goldman Sachs, are there certain sectors that are better at diversifying company boards, diversifying in-house than others?
Actually, where you see better is across cap. So larger cap companies are better on some of these gender issues than smaller cap. And again, it really comes back to this issue of disclosure. We need people to put the data out there to hold them accountable for improvement. And I am happy to go back and pivot and talk more about the near-term dynamics and whether this market rally is sustainable. But I wanted to make sure we did that against the context of the need to push for greater economic inclusion and greater economic long-term stability.
No, absolutely. I'm glad that you did. And when you're saying that the larger cap companies, perhaps because they have more resources, are more transparent, perhaps, but I'd love to talk about their performance in the stock market recently, because typically those smaller cap stocks are, I guess, more sensitive to economic shifts than the larger ones. How have small caps been faring versus the large caps, and what's your position there?
Sure, absolutely. So small caps are the ultimate recovery story. And actually, when I had the privilege of being on your program about a month ago, we did encourage investors to commit capital to the small cap markets. And they are up 15% really over the last month, outperforming large caps by 5%. So we have started to see that recovery out. I would say we still think that small cap companies are a very worthy place for clients to commit capital. While they have started to recover, I would remind investors that actually when you look at their total recovery off of bear market bottoms, particularly in the growth part of the small cap market, it's a 60% return profile. And we obviously haven't gotten there yet. And they outperform large caps over that bottom of bear markets about 20% a year forward. So there's still a lot of room for small caps to go. And while they have started to recover as we anticipated, we think that it's reasonable for clients to commit capital there.
Katie, getting on the diversity front, getting back that, the ultimate sign of holding management teams accountable, I would imagine, is selling their stock. So if these companies don't put forward plans that you find acceptable, are you willing to say, you know what, we're not going to give you any more time. We're just going to go out there and sell your stock?
Yeah, so that's one of the reasons that active management is so important, because unlike passive indexes, if people are not adhering to best in class policies across diversity, but also a variety of issues, we will we have and we would divest from their shares. And obviously we need our peers to join us in pushing for better disclosure, which is something that we're really hopeful for.
What about in terms of dividends and buying back stock? I mean, are those things that you would be looking at as well? You know, if a company sort of wasn't transparent in the way that you'd like to see, the diversity wasn't sort of ticking up and happening at that company, are there ways to sort of, in essence, keep them in line by putting some limits on things like buying back shares or dividend payments?
I think the best way to hold people accountable is to engage, for them to have more transparency and more disclosure, and then to align the proxy voting process to push for those things. And also, again, to get our peers involved too, because we need the whole industry to move in that direction. And I actually think it's that really the answer isn't so much in restricting the capital structure, but is in pushing for the transparency and the reporting that we can hold them accountable for. And just going back to gender for a second, where we've had more progress, we voted against 200 companies in the US last year for not having a woman on the board. And about half of them have actually added a woman on the board since then. So we know that when people disclose data and you align your engagement and proxy policies for it, you can push for change. So I don't mean to sound like a broken record on it, but we need the data. And as any good management team knows, if you can't measure it, you can't push for the progress that you want to see.
Katie, the Goldman team this morning put out a very good note looking at political risk starting to seep into the market. Are you concerned? When is that pivot point in the market when they say when they get more worried about the election, and what action should investors take?
Yeah, so because I think as an investor, one of the most important things is to be humble and know where your edge is. So I want to share with you that I have no edge on calling the political outcome in the U.S. this year, but I certainly see risks around the outcome of that election and the knock-on impact to the corporate sector. So what we do in moments like this is just try and keep balance in our portfolio and really focus on where we do have an edge, which is making individual company calls rather than trying to align ourselves with a political view, which is binary and where we can't call that. But if I could actually address one thing, I mentioned the point of being selective at the company level. We've talked a lot about this rally and the resilience of markets. I do want to make the point, and I said this the last time I was on the show, and it remains true. While markets have effectively recovered and are flat on the year, that is really being by a very select group of companies. The tech big platforms in particular are up 18%, but the median company in the U.S. market is 18% below its high. So there really is opportunity in this market, accounting for many of the risks that exist out there. And so our job is really to find where are those opportunities that haven't been fully priced into markets. And we talked about small cap as a place where we're seeing that opportunity. And I would also just identify 3 areas we're very focused on where we think that there's secular growth. And also it hasn't been fully priced in, which is a change in supply chain dynamics as we localize supply chains. It is the rise in millennial consumption behavior across all demographics. Just a quick stat there, the amount of online activity or e-commerce penetration, we went into this crisis at 16%. We think that may now be as high as 27%. So we've effectively seen 8 years of penetration come in 8 weeks. And we think that we're invested in the companies supporting the infrastructure of that. And then finally, future of healthcare. We talked about genomics last time, but medical devices, that's a great example of healthcare's recovered for the year. Medical devices, things like robotic surgery, which we're extremely optimistic about, still down 10% on the year. And so while we're not excited about overall market levels and valuations are stretched, my point to you is that if you look below that, this is actually one of the best opportunities that we've ever seen for active management. And we can identify a lot of opportunities at the individual company level.
All right, we'll leave it there. Katie Koch, co-head of fundamental equity at Goldman Sachs, always bringing us some really, really good insights. We'll talk to you soon.
Thank you so much.